Welcome to The Trade. Well, before we get to the charts, let's get across what is happening at a global level. White House economic advisor Kevin Hassett saying the US job gains could be lower in the coming months due to slower labour force growth and higher productivity, saying, I think that you should expect slightly smaller job numbers that are consistent with high GDP growth right now. Population growth is going down, productivity growth is skyrocketing. Well, Bloomberg has reported that Chinese regulators have advised financial institutions to rein in their holdings of US Treasury bonds, citing concerns over concentration risks and market volatility. The US 2-year yield falling to 3.48%, the 10-year at 4.2%. Australian 3-year government bond yields at 4.33%. The US dollar index down more than 0.5% on the day. The yen strengthening after Japanese Prime Minister Sanae Takeichi's resounding election victory. The Aussie trading at 70.9 US cents. Let's take a look at the charts that matter now. And to do that, we're joined by Chen from Vantage Markets. Hebby, welcome back. Great to have you on the show. Well, we are very much into reporting season, so we've got some big results coming up this week, certainly from CBA and CSL as well, Evolution Mining. Now, you're going to get across the charts for these. Let's begin with the biggest bank, CBA, particularly not just what we're going to hear from them in terms of reporting, but also given where we are in the interest rate cycle.
Yes, exactly. Good morning, Andrew. Thank you for having me today. Well, yes, definitely for all the Aussie investors, this is a very compact week. And for CBA, which will report tomorrow, as you mentioned, yes, exactly. I think this is quite interesting and sensitive timing. They're talking about the interest rate. And you can see that the share prices actually has benefited from that. The prices has up about nearly 10% in the past 2 weeks, and driven by the anticipation, starting from anticipation and also the aftermath of the RBA has re-entered a tightening cycle, which seems to provide a pretty supportive backdrop for the bank to improve its margin. So I think going into a result, the focus will continue to squarely focus on the profitabilities. A key indicator will be a net interest margin from the company, also as the dividends that the profit they could share with the shareholders. But I want to focus on the prices. The history-wise, I'm putting up the two vertical line here. As you can see that in the past two earnings, the share prices often suffer a bit of the pullback after the earnings, regardless of the earning, whether it's a bit or it's a miss there. So which showing that the investors always hold pretty high anticipation for CBA's result. Apart from that, also a pattern I also noticed from the technical wise is that after CBA peak last June, and the prices continue to trade in a corrective phase, and that has painted a head shoulder, which I'm putting up the orange line here. That pattern leaves the next or the key resistance will be the mid 160s, and this is coming from its shoulder lines, that from the head shoulder pattern as the major ceiling, and you can anticipate that the 200-day simple moving average will also align with this level in the future. So in the case that these upcoming earnings could deliver a surprise positive one for the price to continue its uptrend journey since the RBA hikes, I think I would expect the mid 160 will be a key hurdle for the price to keep breaking before they're making the next leg higher. In terms of support wise, I will focus on the 152 where that you can find the 20 and 50-day simple moving averages, also as well as the previous ceiling of a tunnel that has been transferred into from a resistance to a near-term support now. In terms of momentum-wise, the MACD is painting a bit of positive. I would say that there is now pointing to the positive for the first time since November. I think there's a positive sign showing a bit of the warming up. RSI is also the in between, above a bit of a neutral, but yet to get into the overbought area, showing the potential for the price to keep pushing up if the earnings do meet the high anticipation for CBA.
All right, so some key levels there to watch for CBA ahead of its results tomorrow. CSL, also obviously one of the heavy hitters on the ASX. Now its share price has been under so much pressure. In fact, it's a 7-year low. What are you watching there, Heavy?
Yeah, so totally another story like for CSL. Its price, as you mentioned, is now trading at lowest level since 2009. And that doesn't happen overnight. As you can see from the chart later, you can see that there's a multiple round of earnings disappointment since 2024. And it doesn't, the disappointment, not the majority coming from its revenue. Actually, the revenue growth remains pretty solid, but the major concern of real issue for CSO has been always focused on its margins, execution, and most recently is about the uncertainty around the restructure plan. For these upcoming earnings, that I do not expect a huge surprise beat. I think it's probably more about whether the company could restore the trust and provide more certainties for its investors. The price action also tells a clear story. The CSO has been locked in the downtrend since 2024 peak, while the rally is consistently capped by the falling 200-day simple moving average. This red line a bit turned orange here, and the August sell-off only breaking the board towards below $200. So in terms of near term, I do see a heavy resistance band in between 189 and 210, and in between them, that's a 200 psychological level. So you can see the multiple level of resistance is not just around the corner. Momentum-wise, the indicators are improving. That's a positive sign that with RSI's at highest level since October and MACD is now flattening. But I will be a bit hesitant to saying there's a confirmed reversal from this level. So as you mentioned, at the 7-year low now, prices, the CSO doesn't need a blowout quarters, but it's more about that offer more certainty to its shareholder.
All right. Okay, that's CSL. Thirdly, a quick look at Evolution Mining now. Of course, one of the premier gold miners on the ASX, and fascinating to see what's going on with the gold price at the moment. How's that reflected in the trends you're seeing for Evolution on the chart?
Yeah, exactly. Evolution Mining is exactly the premier, and it's actually the strongest performer in 2024. The price is up about more than 170% over the past 12 months, and it's closely, or you can perfectly tracking the strengths in gold prices. I'm putting up the gold prices here. You can see that it's pretty closely aligned with the movement for the Evolution's price action. Also, apart from that, this price action is also backed by fundamentals, so that's something that I think investors will quite pretty much looking forward into the earnings, especially based on the most recent report from December, showing the company's balance sheet. I'm also putting up a snapshot here that you can seeing that the balance sheet is exceptionally quite strong. The cash flow sitting on the company's account, and everything seems to be quite perfect for the company. But I think more about this earnings season is about after the previous pullback, we're seeing the gold prices pulling back quite substantially, also pulling the Evolution Mining's prices down roughly about 10%. And what is next leg? What's the next movement for the Evolution? I will say that in terms of technical wise, that Evolution remains in the pretty clean ascending trend line. They can see that even the pullback, the price is still holding quite solid above its 20 and 50-day moving averages. There's a pretty strong signal that broader bull cases remains pretty valid. But if the weakness extends, there's also a possibility if you're looking for the MACD has already showing a bit of a death close signal as sort of mirror what's happening back in October when the price is pulling back about 16%. That's also a possibility. If that happens, I think that 9 to 14 areas will stand out as a key support that will marking the former resistance turning to a key support. But in terms of the upside, I would say that the prices wise, there's no anticipation there will be a big negative surprise from its upcoming earnings, but in terms of prices wise, that it could likely to get into a consolidation phase before that price is going back into the previous straight ascending journey.
Hebe, great to get across the charts ahead of those results this week. Thanks so much for joining us.
Thank you.
And that is The Trade.